South African Markets Exchange, the JSE, has reported a robust performance in its annual financial report. For the 12 months ended December 2024, the company said that its total income rose by 6.5% to just under 3.2 billion rand, while also reporting an increase in net profit after tax of 10.4% at 918 million rand and a return on equity of 20.2%, up from 19.4% in the prior year. The board has also resolved to declare a gross ordinary dividend of 8.28 rand for shareholders. Well, to take us behind the numbers, I'm joined by Leila Fourie. She's the CEO of the JSE. Thanks very much, Leila, for joining us. So what were the drivers of the growth that you saw in your numbers? And from what you say in your statement, the formation of the GNU seemingly helped to spur increased activity.
Hi, Nompu. Yes, we are very pleased with the outcome of our results. The net profit after tax of 10.4% being up was off the back of a very challenging year. The first half of the year, we saw muted activity with very much of a wait-and-see mentality by investors. After the GNU, we saw a surge in our average daily value traded, and also our index ended up more than 9%. That compares to other emerging markets, which were only up by 5%. We've seen that positive investor sentiment about South Africa continuing into this year, and we are up by more than 2% on our index, and America's NASDAQ and the S&P are either negative or up by less than what South Africa is up by. So we are seeing an improvement in investor confidence. We have also worked very hard to diversify our revenue and to make sure that we're not only dependent on trading revenues for our results.
So typically one would perceive that you are a trading sort of platform. So what else do you do where you're able to make, diverse revenue?
Nompu, we provide market data, we provide technology infrastructure, and importantly, we also look after shareholders, the man in the streets shareholding. We are launching a campaign which is called Claim It, and that enables all of our citizens to go onto our website to check whether they have shares that have outstanding dividends, which means they are owed money by the listed companies, and they're able to fill in a form and determine what sort of money might be owed to them. So we make almost 40%, 39% of our revenue comes from non-trading activities, and the management of shareholders' administration, once they own a share, is a very large part of that, and that business was up by 20% year on year.
Now, of course, it's important for you to diversify your revenues, as you say, but you have your core, that being of, trading in many different asset classes. How have you been doing with the strategy to get more businesses to come on board and list with the JSE in order for them to raise money to invest in their businesses? Because that has seemingly been a challenge for you in the past number of years.
Indeed, Nompu, our ability to attract flows is very much driven by market sentiment, and we have seen a turnaround post the Government of National Unity, and that turnaround has continued into this year. For the year to date, our average daily value that's traded on the exchange is up by 45%. If we just take the JSE share price as a proxy for markets, our share price outperformed all major benchmarks last year. We were up by more than 30%. And so we are working with government and other listed companies to visit other international investors and to encourage inbound investment. We've been very heartened by the positive response that we've seen by international investors. They're finally starting to sit up and say, South Africa might be delivering growth. after 10 years of very difficult headwinds in the economic growth side.
Indeed, it's been a long haul indeed for you, and I suppose it's good news for you, having been at the helm at the JSE for quite some time, to see this positive uplift. But I did want to ask you lastly, of course, trading houses and platforms are a function of what's happening in the local and global economy, and there's so much going on right now. Currently, locally, we don't know whether we're going to have a budget tabled, and globally, we've got major ructions taking place, tectonic plates moving, if you like. Based on that, what is your outlook for 2025? And I know you don't hold a crystal ball.
Yes, of course, and we don't forecast in where markets are going. What we can say is that there is substantial volatility, both globally, geopolitically and economically. Inflation is not yet under control, both globally and locally. And then, of course, we all have been watching the press in what's happening in the Middle East, Ukraine, the US, etc. What we can say is that South Africa has demonstrated a much more consistent promise of democracy. Even the delay of the budget speech demonstrated that we have a robust democratic process. And South Africa's growth prospects relative to most other emerging markets are looking better. So we are seeing traders trading through the noise, so to speak, and focusing on where companies can add real value and produce real returns, like the JSE has done through a very difficult market. We have many single name companies that are household names across the world, very large global footprints, and those companies are starting to attract interest. They are undervalued, which means they're very cheap for the value that they offer, and there is potential upside. So we are starting to see a flicker of hope. We're cautiously optimistic. And our GNU is very, very important in sustaining the confidence. And to the extent that we start to deliver that growth, we will start to see investors reinvesting in our South African listed entities.
All right, Leila, thank you so much for your time and your insights there.
Thank you, Nampu.
Leila Fourie, she's the CEO of the JSE.